If you've been trying to pass a prop firm challenge and you're tired of failing phase 1, failing phase 2, or blowing your account right after getting funded, then this video is for you. In this full guide, I'm going to show you exactly what you need to focus on to pass a prop firm challenge and stay funded consistently, not just get one lucky payout. By the end of this video, you will have a clear roadmap to follow, which platform to choose, how to read and respect the rules, how to build and stick to a real strategy, how to not over risk, and how to set a realistic daily, weekly, and monthly target. This is not a theory. These are the same principles traders use to pull consistent payouts, not just one-time wins. All right, let's begin. First of all, we need to decide where we're trading. In this video, I'm going to use Goat Funded Trader as the example because it is one of the most flexible solutions for traders right now. So you can choose from 1-step, 2-step, 3-step, and instant funding, where you can start trading live capital right away. If you want instant access to the markets without passing phase 1, phase 2, instant funding is probably going to be the best option for you. It's one of the most popular programs and it helps a lot of traders get their first payout faster because they don't have to prove they're profitable through multiple phases. They just trade. But in this guide, I'm going to show you the evaluation model because the rules and mindset here will help you pass any prop firm. Let's say we choose a 2-step GOAT 100K account. Once you pick your program, this is the most important thing, and this is where most traders tend to fail. They need to understand the rules completely. Most people lose not because they're bad traders, but it's because they break rules they never fully read. So step 1 has an 8% profit target, meaning you have to reach 8% of your account to pass phase 1. And then your phase 2 or step 2, your profit target is 6%. And then after you pass those 2 steps, then you actually get funded. And most 2-step challenges offer around the same profit targets, but actually I've noticed that a lot of other firms' profit targets are higher, like 10% for phase 1 and 5% for phase 2. So Goat Funded Trader has less when you see it, 8% and 6%. That means your job is not to double the account, but is to reach those specific profit targets without breaking the rules. Your daily drawdown is 4% for step 1, and it's the same for step 2. 4%. And once you get funded, the daily drawdown does not change. It stays at 4%. But this varies. It's often around 4% to 5%, just depending on what account you choose. But what does daily drawdown mean? Well, it means in a single day, from your daily starting equity, you cannot lose more than that amount. You can always see after every restart day exactly what your balance is and the number that you cannot pass daily, and it'll do the calculations for you. But just know that it is 4%. Remember, if you risk too much on one trade or stack too many positions, you break this rule and your challenge is over. Now let's look at the maximum drawdown. The maximum drawdown is 10% throughout all phases. This is your hard floor, meaning if your account balance drops below this, your account has now become breached. Let's look at your trading period. You have a no time limit. On Goat Funded Trader, there is no strict time limit on many evaluations that they offer, which is a huge advantage. You don't need to rush. You can take your time, wait for clean setups, and trade without the pressure. Let's go on to the payout and reward schedule. Once funded, you'll have a payout schedule. For example, you can have bi-weekly, which is every 2 weeks, or an add-on, which is on demand. And your profit split is 80% standard. And if you want to add on to 100%, you absolutely can. That decision is going to affect how you're going to reach your monthly goals. And let's look at news trading. On GFT, news trading is allowed, and depending on your account, weekend holding is also allowed. But just to make sure, you should always double check the frequent asked questions or FAQ page to see exactly what is and what isn't allowed for your plan. And one more very important thing, on Goat Funded Trader, the fee is 100% refundable once you pass the evaluations and get to a live funded account. So you get your money back. So don't think of buying a challenge as buying a lottery ticket. Think of it as an investment. You're essentially investing to access more capital. And once you pass, you get your fee back and you get to keep trading your live funded account. So to sum up this first part, before you even think about the strategy, you must choose the right plan for you, read every rule at least twice, and understand your profit target, your daily drawdown, and your maximum drawdown. If you don't respect these rules, it doesn't matter how good your trades are, you're not going to pass. Now let's move on to the second pillar. You need a real strategy that works from time to time again. Passing a prop firm isn't about waking up, opening up a random chart, and guessing which direction the market is going. You need a clear bias, seeing if the market is bullish, bearish, and most likely if it's consolidating, you're gonna wanna stay out. Let's just say if I were to open up NAS 100 and I want to look at which direction it's going in, and I can see that NAS 100 is in a downtrend. Now, how do I know that it's in a downtrend? Because I'm looking at how it's creating lower highs and lower lows. So first you need to identify market structure, and then you need to understand your entry criteria, your stop loss placement, your take profit structure, and rules for when not to trade at all, which is actually most key because it's not about how many trades you take, but the right trades. Remember, quality over quantity when it comes to trading. So it doesn't have to be some crazy complicated system. It just needs to be defined, meaning you can explain it in simple steps. Remember that less is better. Repeatable. You should be able to apply it day after day and test it. You should have seen that this strategy has been working for more than 1, 2, 3, 4, 5, 10, 20 trades. You should have already tested your strategy on a demo account or a small personal account. This is very key and important. Don't just buy an account and try to test a strategy. There are demo accounts, so you don't have to risk your money into failing a challenge or even risking your money in small person accounts. I would just simply try it on a demo account and backtest. And that's all before bringing it into a prop firm environment. If your strategy is not profitable, or even if it's not break even before a challenge, buying a challenge is not magically going to fix your strategy. In fact, the pressure you're going to feel is actually going to make it worse. So ask yourself these questions. Do I have screenshots or journal entries of my best setups? Do I know what not to trade? Do I know my win rate, average risk reward, and typical drawdown? If your answer is no, your first step is not to buy a challenge. Your first step is to build and test a real strategy. Prop firms like Goat Funded Trader are there to scale your skill, not to cover the absence of a skill. So if you don't have a skill, you can't use a prop firm to build it with anything. The prop firm is there to give you the capital to use your skill to get funded. Okay, now let's move on to our third pillar. And this is the one that breaks more accounts than anything. All traders have done this before, myself included, and that's over risky. But most traders don't fail because their trade was a terrible idea. They fail because their position size is completely out of proportion. On a 100K account, risking should be 5% per trade. Stacking multiple positions or simply ignoring your daily drawdown means you're only a couple of trades from actually really blowing your account. On a prop account, keep in mind that your first job is survival first and profit comes second. Here's a simple way to think about it. So remember, you're gonna wanna risk 0.5% to 1% per trade. Have a personal daily max loss below the firm's daily drawdown. For example, if the prop firm is giving you 5% daily drawdown, cap yourself at 2 to 3% per trade. I personally like to do 2% because it's more even that way. 3% is closer to 5 and 2% is closer to 1. So remember, the lesser, the better. Also limit the number of trades you take per day. This is most key. For example, I'm only gonna take 3 trades per day. Anytime you hit your daily loss limit, or you feel emotional frustration, or you feel the urge to make it back, stop trading immediately. Revenge trading is the fastest way to hit a max drawdown and kill a perfectly fine evaluation. I personally cannot tell you how many challenges I have blown due to revenge trading, because for one, when you're in the heat of emotion and you gotta revenge trade to make your money back, you're not thinking of numbers, you're not calculating how fast you're losing, or if I take a profit here, if I'm scalping and I take a loss here. The numbers are going everywhere and I'm not keeping calculations. So if you simplify your trading and you simplify the trades you take and you lower your risk, you have better control of your account and the chances of passing. Remember, the goal isn't to pass in one day. The goal is to pass without blowing up, which is why Goat Funded Traders offers a no time limit. Don't feel the pressure or rush. You have all the time, so use it to your advantage. You can pass in 3 days or 60 days. It really doesn't matter, and it's really up to you. But what matters is that you're still alive in the game, because it's always going to be trades. Every day there's going to be a setup. So don't think you have to trade every day. As a matter of fact, my advice to you would be to skip a day in between or skip a couple of days, because looking at the markets is always good to look at it with a fresh mindset. So don't drain yourself. Remember, you have the time, so use it. Finally, our fourth pillar. You need clear targets, daily, weekly, and monthly. They must be realistic and align with the rules. Most traders go wrong because here's what they think. I need to hit 8% as fast as possible because they want the money fast. So they want to hit the profit targets fast. But instead, think like this. I need to trade my edge consistently until 8% happens. Let the 8% come to you. Don't chase the 8%. And I promise you, you're going to see a change in your trading and your win rate will go up because you're focused on the trading and not the money. So I'm going to show you a simple framework you can use. Remember, 1 to 3 trades per day. Max daily loss 2 to 3%. And let's say my daily goal is to make a profit target of 1 to 2%. But remember, it's a cap and not a must. If you hit your daily loss cap, you can also stop trading and protect your capital. Focus on the process and not the money. Remember, it's all about the journey and not the destination. Ask yourself, did I follow my rules? Did I respect my risk? Did I avoid revenge trading? Adjust if you're over trading or forcing setups. For your monthly challenge wide, your only real result target is reaching your profit target without violating the rules. Don't try to multiply your performance just because you're in a challenge. Trade exactly how you would trade once you're funded. So if you're trying to over risk to quickly pass a challenge, that's not how you're going to trade once you're funded. Once you're funded, you're going to take it slow and want to protect your capital to get a payout. So use that same method when you're trading a challenge account to pass. If you treat their valuation like playing a casino, you will treat the funded capital the same way and you'll lose it. If instead you treat their valuation like a rehearsal of your funded career, you're not only pass, but you're stay funded. So let's say the max number of trades I took were 3 trades, right? Here's my first trade that I took and I hit profit. Remember, my max daily loss is 2 to 3%. Let's just say here I gained 2%. And let's say here I lost 1%. And then here I gained another 2%. So really, I have 4% of a win minus 1% loss because I am controlling my risk of a loss. That means I still have a 3% of profit target that is in my account balance. So if you control your risk, you still have an average of winning, you will still be profitable. So it's okay to take a loss. And remember, I'm taking these trades not back to back, not on the same day, but throughout the days because I have time and I'm not feeling rushed. Now that we have covered all the rules, the strategy, the risk management, and the daily, weekly targets, let me show you something that's even more important. And that's real trades that would actually pass a prop firm challenge. One of the biggest mistakes traders make is believing that they need to take 20 trades per week or that they need to flip their accounts within a couple of days. But passing a phase 1 or phase 2 often requires just focusing on a handful of high profitability trades. Enter with patience, discipline, and proper risk. Let me show you 3 examples of a trades. So for example 1, I'm going to show you a clean take profit. This first trade is a perfect example of a high profitability, high quality setup. Clear market structure, clean direction, and controlled risk. This is the kind of trade that moves you closer to passing phase 1. Not because it's huge, but because it's clean and controlled. So let's jump in. So here I took a sell on gold. What I see is that gold has broken right here, this break of structure, right? And what happens? Gold sells, right? It pushes down. I notice that gold comes back here to this demand area. So here's my thinking behind this trade. If gold can break structure at this level here again, I'm going to expect push down here. So this was without seeing this. So I'm seeing if gold can break structure here again in this area, I'm going to jump into a sell. How gold perfectly drop back down again to the same area of demand, right? Because we have demand and support. What does gold do? A perfect drop down and continues to go up. Now this is important on why you wouldn't enter a buy. So this is my demand area for gold and this is my support area. I noticed that once gold has broke structure here again, as you can see, it's been creating a higher high, a lower high. I can start seeing that this is going into an uptrend. So if gold has broken structure here, I can see in the previous, so right around this area, I would have went into a buy, but I didn't go into buy here because gold was not breaking structure above this level of area of support. Here's a second winning trade. Again, Simple, structured, nothing forced. When you stack 2 clean winning trades like this, you're already halfway towards your profit target. And notice, I'm not trading every day. I leave gaps in between. I'm not forcing entries. These setups took days to form. This is what real discipline looks like. So here's a buy I took on gold. I entered at 3,932 and I took profit around 3,943. Basically a 100 pip move, which is exactly what most traders are looking for. So why did I take this buy on gold? Well, I noticed that gold was in a support and resistance movement. But here's the real thing that I noticed right here that made me want to get into a buy. So I want you guys to look at this area right here. So a fair value gap is usually when a candle leaves a gap before and after. Usually when that happens, price is going to return to that area to fill it. And as we can see here, that is exactly what gold did. I can identify a simple support and resistance with gold support area and that being my resistance area. So once gold came back and bounced off this support area identifies buying into a buy, obviously. I noticed gold, this is right here, it's just a little bit liquidity sweep, but we're not going to get into that. Usually wicks are a liquidity sweep. But once I noticed gold jumping off the support area and then I had identified that fair value gap, it was only a matter of time that gold was going to get into a buy, and gold beautifully did that without any hesitation really. And I love trades like this. So a fair value gap is a basic ICT concept. I really like to stick to simple concepts. People have SMT, you have ISCT, whatever works for you. You do have to find your own trading strategy. I like to pull them from different concepts. You know, I like the old-fashioned supply and demand, support or resistance. Now here's a losing trade, and I'm showing this on purpose because we all learn from mistakes. Passing a prop firm challenge does not require a 100% win rate, because if it did, no one would be funded. You take losses, and that's completely normal. What matters is that you respect your stop loss. Your risk is capped. You don't spiral into revenge trading. This loss is just a normal part of the process, because remember, the 2 wins before still keeps us in profit. So here I took a sell on gold, and gold just continued to buy. So I want to take you through my thought process on why I took a sell on gold and why unfortunately it didn't work out. So even though I have identified a break of structure, a supply and demand area, and set my stop loss to appropriate risk proportion, the market does go against you sometimes, and as you can see, gold broke that structure of resistance, which is why it went into a buy, but at that moment I did not see it. Of course, looking back, I understand where I went wrong, but this is just all a part of the process or the game, as someone like. And yeah, as long as you take controlled losses, you'll still be profitable and you'll still be able to manage to pass your challenge. So I simply identified a structure break here in gold, which is why I took a buy and I set my stop loss back to this area, because if gold were to come back down here, I knew that it wasn't going to buy just yet. So what is a structure break? Okay, so it's when price breaks through a previous high or low with force. So combining those two is a structure break. Remember, breaking previous high or low with a strong force, also breaking through a fair value gap would be a structure break. That means that the market is moving towards the next level, which we can see here. Now I identified this as our previous market high, and this right here was our fair value gap. This area, you can see, fair value gap, the candle is closing before and after. This was in a buy. We recently did one in a sell, just reversing. So when I identified both of those, when I identified, hey, gold is breaking our previous high here and it's breaking through that fair value gap, I'm going to expect a momentum into the uptrend, and it did that with extreme force. As you see, this long body of candle here, no wicks. Pay attention to how the bottom is a flat candle. This is a secret, but usually when a candle has a closed bottom, as you see here, when a candle has a closed bottom here, that identifies a buy. And then of course we get the strong movement towards the uptrend. So remember, identify my previous high and a fair value gap. I'm expecting gold to break through these structures for a buy. and gold does a big push momentum to the buy side. And those are two key levels of the reason why I got into this trade. And a trade like this can push your account into passing phase one, especially this. I mean, we all want this. So this is how funded traders actually pass. Not with 20 trades in 2 days, not with crazy lot sizes, not by forcing setups. They pass by taking few, clean, profitable setups over time with proper risk. And that's exactly what you want to replicate. So here's a quick recap. Choose the right prop firm and understand the rules. Use a real tested strategy, not just some vibe I'm feeling today of the market's gonna buy or sell. Protect your account with proper risk management. Remember, don't overtrade and don't revenge trade. Set a realistic daily, weekly, and monthly targets. Focus on the process and not instant results. If you want a prop firm that actually supports this type of trading, Gold Funded Trader is built for traders who want to grow steadily and not gamble. You can choose between 1-step, 2-step, and 3 steps, or instant funding if you want to skip the evaluation process and start trading with live capital right away. Here at Gold Funded Trader, you will find clear rules, no time pressure, bi-weekly payouts, and a 100% fee refundable to you once you pass and have your live funded account. I'll leave the link in the description. Go through the plans, read the rules, and choose the best trading plan that fits your style. And remember, passing a prop firm isn't magic. It's structure, discipline, and it happens over time. Remember to always trade smart, trade funded. And I'll see you guys in the next video.